to the next panel session, which is always about money, right? That's entrepreneurs want to know about it. So this session is about funding startups in Africa. We're going to be thinking through what are the different models, what are the gaps, what are the needs, where is there a disconnect, what kind of financial products need to be created, developed, or modified to suit the needs of the continent. And so I'm very excited to welcome this dynamic panel again with Aline from Alan and Gil Gray Philanthropy, Evelyn from WIC Capital, Ina Lugo from ARM, Yannick from Bestseller Foundation, Philip from Catapult, and this session will be moderated by Obina, who's the Chief Digital Officer at Bank of Kigali. Can you give him a round of applause?
Thank you for the introduction, Gbemi. It's a pleasure to be here today. I have the distinct honor of moderating a discussion on startup funding in Rwanda and across Africa at large. And we have a really heavy set of panelists for you today. So I'll go ahead and introduce them one by one and invite them up onto the stage. So we have Evelyn Dio from Senegal, please. She's the managing director of WIC Capital. They invest in women. That's all I'll say. I'll give them an opportunity to tell all of us more about what they do. Next, I would like to invite Aline Kabanda onto the stage. Aline serves as the country director for Alan and Gil Gray Philanthropy and Jessiri Programs, as you might know them as. Ina Alogu. Ina is the Director of Digital Transformation at ARM Holdco, overseeing asset and resource management. Welcome onto the stage, Ina. We also have Philip Gasatura. You may know him. Philip is the founder and, he's a country director for a venture capital fund known as Catapult Rwanda. They recently launched a seed fund. This was announced, and you may have seen that in the news. Welcome, Philip. We also have Janek Hagen. Janek is the managing director at Bestseller Foundation, a foundation based in Rwanda. They support SMEs and entrepreneurs across sub-Saharan Africa. Good. Thank you all. So before we get into the questions, I think it would be great if perhaps we introduced ourselves to the audience. So say your name, your current position, and in a few sentences, describe what it is that you do and why they will be so interested to hear more about that. I'll start with myself, and then I'll pass it on to Philip. My name is Obina Ukwani. As Gbemi said, I'm the Chief Digital Officer at Bank of Kigali. I run the digital factory where we build new digital financial solutions for the clients of Bank of Kigali here in Rwanda. Philip?
Well, good afternoon, everyone. My name is Philip Gasatura, and I'm the country director for Catapult. Catapult is a venture capital firm based out in Oslo, and now operations here in Rwanda covering Africa. We invest in early stage, and our focus in the last couple of years has been in ocean and climate, and now more focused in Africa, again, still food and climate. We've invested in about 165 companies around the world and managing about $100 million US. And on the African continent, we've done 2 funds, and the more recent one that Obi shared was done here in Rwanda and domiciled here, and we invested in about, through that fund, 9 companies, and exciting to be here. And so looking forward to hearing more about stories and sharing what we do. And I'll pause there.
Thank you, Philip. Round of applause, please, for Philip. Evelyn?
Thank you. So I kind of mixed everything up and just came on stage without being called, sorry. So my name is Evelyn Jor Sampa. I'm the managing director of WIC Capital, which is an investment fund. We started our operations in 2019 in Senegal. And our specificity is that we were launched by a group of Senegalese women who joined forces and their savings to address the needs of women entrepreneurs in Senegal. And then 2 years after that, another week was set up in Côte d'Ivoire, so that now the fund targets Senegalese women entrepreneurs in Senegal and Côte d'Ivoire. We invest in early stage small and growing businesses with a high potential for growth. And our tickets went from 50,000 to 500,000 USD. I'm very excited to be here. It's my first time in Rwanda, in Kigali. So far, extremely excited, looking forward to our conversation.
Thank you, Evelyn, and welcome. Ina? Yes.
Sorry, wrong button. Good afternoon, everyone. My name is Ina Alogu. I'm the Group Director of Digital Transformation at a company called ARM. So it's not Obina. So ARM is an acronym for Asset and Resource Management Company. It's a holding company that has 7 subsidiaries. 4 of them are in traditional asset management, 2 of them are private equity firms, and then 1 of them is a real estate company that operates in 6 different African countries. My role generally is to help all of the 7 subsidiaries with their digital transformation efforts, but I also oversee 3 venture building programs, all of them focused on early stage companies, but they have very specific different focuses. The first is an impact focused program that focuses on tech startups that build solutions that help drive the United Nations Sustainable Development Goals. And in that program, we give grants to support those startups in what they do. The second is an incubation program that prepares early stage companies for acceleration. It's run under the ARM Labs, and we invest $50,000 in companies just to get them to the stage of acceleration. And recently, we partnered with one of the largest accelerators in the world called Techstars to launch the ARM Labs Lagos Techstars Accelerator. And it invests $120,000 in startups every year. But the scope of startups that we focus on is not just Nigeria, but even though it's a Lagos-based program, all startups from any part of Africa are eligible to apply. And we invest $120,000 in startups. We intend to expand our venture building endeavors into seed stage and Series A later in the future, but we're now focused on early stage companies.
Thank you so much, Ina. Welcome. Applause, please. Aline?
Good afternoon. Good afternoon.
Good afternoon.
I'm very excited to be here. My name is Aline Kabanda, and I work with the Alan and Jill Gray Philanthropies as the country director for Rwanda. I'm very excited to be here and just wanted to commend CMU for this amazing initiative. I think 2 years ago, we didn't have much of this in the month of November, December. I really characterized with a lot of exciting conversations, momentum in the space of entrepreneurship. So well done. Within the Alan and Jill Gray philanthropy, we run a number of entrepreneurship development programs, which, one of which is a Jasiri program that has 2 streams. We have a talent investor program, which is, as the name indicates, it's an investment in exceptional entrepreneurial talent that aspire to become entrepreneurs. And for a period of 12 months, we work with them throughout the whole journey of launching their ventures from scratch. And within that, we do have a number of funding offered to them in terms of monthly stipends and milestone-based funding. I'll get to the details in a moment, but we also run a growth accelerator that then selects a number of exceptional ventures. I was very excited to hear of these 2 a moment ago, and really working towards accelerating their growth, and with that providing the investment that they need to achieve their growth milestone. So thank you.
Thank you, Aline. Janek?
Yeah, thanks. Good afternoon, Yannick Hagen with the Bestseller Foundation. We're a Danish headquartered foundation with our African base right here in Kigali since 8 months. Super excited to be here and try and plug in the right place in the ecosystem that's flourishing here with our capital. Try to plug in where it can matter the most. We support and invest in entrepreneurs, startups, ventures that work on eliminating waste and pollution and keep materials and resources in use. So it's a lot about investing in ventures that find ways of recycling waste into energy, waste into different products. For us, that has so far, looking at our portfolio of approximately 30 ventures in Rwanda and in the wider region, that has meant investing in ventures that deal with food waste, plastics waste, textile waste, and we're also looking at electronics and the build environment. We have one sponsor, a Danish corporate fashion group called Bestseller. Having one sponsor brings you in a luxurious position, gives you lots of flexibility, gives you a lot of ability to really plug in where there are some gaps. We also see there's a responsibility then if you have an ability. So yeah, as said, we try to plug in where we matter the most, and in recognition of these entrepreneur startups ventures needing much more support than quote unquote just the cash. We're busy powering up a circular economy hub Africa at the Norsken campus here in Kigali. I'll leave it at that for now.
Thank you, Janek. Good. So we have a diverse and highly experienced group of people for you today. Funds, incubators. Aline, you mentioned something really interesting. Now you run the Jasiri program, which is one of the longer standing entrepreneurship incubators, I think, in Rwanda. So I'll start with you. You mentioned that you identify and invest in exceptional entrepreneurial talent. So tell us, what constitutes exceptional entrepreneurial talent?
Thank you. So we're trying to identify and select individuals who have a history of achievement. What is it that you've done in the past that makes you exceptional? What problems have you solved? And so in attracting different individuals in our program, we have entrepreneurs who might have tried ventures and failed and are looking for the type of guidance in realizing their entrepreneurial aspirations. But we also have individuals who might have been employed for a number of years and do not know where to start. And so what we're saying is, throughout the Talent Investor, we spot those exceptional individuals, and they go through selection processes that try to identify those entrepreneurial competencies and the way they demonstrate themselves. And so then, as they get into the program, we are, as you're mentioning, with them for a longer term. We understand that change takes time. We understand that there are different stages and milestones in creating their ventures. So they really start at ideation. And there's a whole theme around falling in love with the problem, understanding the problem, and then trying to understand the market, and through which really creating an environment of support around the entrepreneurs so that we can increase their chances of success as an entrepreneur, but also provide those linkages and connections that can help them, launch their venture successfully. And so that is within the Talent Investor, but very quickly within the Growth Accelerator, then we're looking at existing businesses that have potential for growth and scale. And so we're looking at people who are dreaming big beyond the boundaries of Rwanda, right? So, and our program is regional. And I forgot to mention that we're attracting candidates from Kenya, from Rwanda, and Ethiopia. And because our headquarters is in Rwanda, they all come here. They form a community. They start to build co-founding teams. They start to think actually big and beyond the boundaries of our countries. And so we have a number of ventures that are created by Kenyans and Rwandans, and so they can explore the different markets, and I think that's what makes the program quite powerful.
Excellent. I'm educated. Thank you, Aline. Now, I'll move to Philip. You also operate primarily in Rwanda at the moment. From your perspective as someone who is involved almost purely in investment, and as someone who started a VC fund in partnership with government, how would you describe that experience? What are the current challenges, both as a fundraiser, trying to raise a fund domiciled here in Rwanda, and then as an investor, finding people to give that money to?
think like a startup, the guys who are here, as a venture capital fund, it is a journey to raise capital. We were fortunate to bring alongside two institutional capital, which was Norfund, together with the Rwandan Pension Fund. But we need to invest not just in Rwanda, but across Rwanda. And I think it's a challenge when you're having to, not many people understand venture capital as an asset class to invest in, because we take investors' money to then go invest in smaller companies. On the other side, when looking for companies, one of the biggest challenges, I think to what Aline pointed out, is strong talent. You're always looking for strong talent. Now, there are dreams, which we are all excited about, but the question we always ask is this the right team to go from $100,000 in revenue to doing $1 million or $10 million? How do they get there? And so finding those teams that have a really exceptional product or service that people want is always a challenge in that one. And what we've seen from our research, because in our last one, we took a look at about 900 companies from across Africa. What you tend to find, and I've mentioned to a few colleagues, is companies out of South Africa and companies out of North Africa tend to be very R&D, IP heavy, and there's a lot of engineering. Whereas what you find across Sub-Saharan Africa is more, it's either two things. It's a marketplace or a payment system. One way or the other, it's falling around there, which are really low-hanging fruit. And so you tend to find if someone's done it in Kenya, most likely someone's done it in Rwanda or Uganda and Ghana. And so the scale aspect, you're looking for those teams that say, look, yes, it's a big market, but we have the team to execute in those markets. So that's what we tend to look for.
Thank you. And one follow-up question. How do you collaborate with incubators and accelerators such as Jasiri?
So we tend for, a lot of our deal flow comes from places like this, where some from South Africa, some from West Africa, others that have venture capital that have been run. They give us those that they say, look, this is on the cusp of, let's say, crossing, let's say, $200,000 revenue. They're doing a revenue-wise, let's say, 10% month on month. And so that's where we get a lot of our partnerships with them to bring us those that, because not everyone will, right? But there are those really strong ones. And ourselves as well, we know where we start and stop. It's an entire value chain. We have where we start and where we stop, and then we also partner with others who will take them through maybe to a Series A or B. Yeah.
Perfect. Thank you. I'm hoping to stir some collaboration, although I'm sure you're doing that already. Ina, so now correct me if I'm wrong, but I believe you're coming from a corporate which facilitates, I guess, venture incubation. So from your perspective, what have been the challenges? What advantages do you think you have as somebody who's representing a larger corporation with other interests?
I think for us, we're lucky that we're in a business where our core, proposition is wealth management. So we encourage people to give us their money, and then we turn those money into what makes profit for them. So we decided to take it a step further, and it's more from demands coming through from our institutional investors and our HNI investors, where they've been hearing about people who have, made some very good ROI from tech startup investments, and they said, I'm interested in this thing. I don't really understand it, but I really want you to guide me and just help me to partake in this. In terms of the challenges we face, we believe as ARM, as an incumbent company whose operations predates the digital era, we feel compelled to support innovation in the ecosystem by doing what we think we can to support tech startups. And we do encourage incumbents like ourselves to do the same. But generally, I guess what really concerns us is if you look at access to funding for African startups, right after the COVID era, between 2020 and 2021, there was a surge in private equity and venture capital investments that was coming through to the startup ecosystem. What we started to see is from the fourth quarter of 2021, there's been a steady decline globally. And so what's happening is the number of high-value companies that are joining the list of unicorns, which are companies whose value is worth 1 billion or more, is dwindling. So between Q2 of this year and Q3 of this year, we've had, in fact, in Q3, only 37 companies have joined the list of unicorns. When you compare that to the previous quarter, where you had 103 new unicorns joining, and if you compare this quarter with the quarter of 2021, where you had 165 unicorns joining, you tend to find that the big funds, who are really the source of funding, are becoming a lot more cautious with how they channel their funds towards tech investments. So when I listened to entrepreneurs yesterday talking about how difficult it is to access funds, it does turn out that even though Africa has defined what the global trend is showing, where in H1, Africa actually set a record for the number of investments that have come through when you compare H1 with the previous years. It is possible that from 2023, most of these funds that go through the VCs that invest in Africa would start to dwindle. And unfortunately, it could mean that startups in the early stage will find it more difficult to source for funds. And I think the only way we can solve that problem is for more corporates to, start thinking about investing in startups. And also African governments also have to recognize that they have a role to play in creating their own funds. So essentially, the source of funding has to be more local than international for us to solve the problem. Otherwise, we're going to see that the global trends will start to play out in the African markets as well.
Thank you, Ina. That was quite insightful. One follow-up question. Briefly, what is your comments on Philip's observation that startups outside of North Africa and SA tend to be less IP heavy?
I think usually startups would differ depending on what markets they operate in. Startups that typically operate in markets that are more technologically mature, like in South Africa and Egypt, would be more IP focused. It's not to say that in the West African and in East African markets, they're not technologically mature, but they're more focused on payments because payments seem to be the more profound problem. Actually, that's not entirely true. It is that the venture capitalists who choose which startups to invest in focus on startups that are focused on payments. And that's because VCs and private equity firms typically are looking for startups that can give them the highest return, not the startups that can make the most impact. So if you come to a country like Nigeria, the sector that typically comes out of recession first and helps pull the other sectors out of recession is the agricultural sector. But if you look at the top 10 sectors where funding is going to, agriculture doesn't even appear in the first 10. Healthcare, which is also one very big, profound problem, is number 5. So essentially, it is startups that are focused on something that interests the international investors that typically get the attention. But in markets like Nigeria, where the focus is the addressable markets and the propensity for you to grow and scale, what you find is that you have startups that are more focused on increasing their scale across the local markets and in other markets in Africa as well.
Thank you very much. I have many other questions, but we'll come back later. I think we still have time. Over to you, Janek. Did I pronounce that correctly?
Yeah, that's
Good,
fine.
excellent.
Thanks.
So you spent quite a bit of time managing investment in Europe with your fellow Europeans. Now you are in Africa, in Rwanda specifically. So at a glance, what are the biggest differences? The challenges that you faced when you were in Europe, or that companies looking for investment faced versus what we face here on the continent?
Yeah, sure. Thank you. Well, the biggest challenge we faced being in Europe was that we wasn't here. Because we've always had an African mandate with our investments. It was a broader than an African mandate in the early days, but now it's an exclusive African mandate. So maybe more talking about some of the challenges that the entrepreneurs, startups, ventures that we invest in face. So they're not tech businesses. They might be tech enabled, but they're more brick and mortar kind of businesses. They running businesses that are capex intensive, opex intensive. So it's really about trying to crack the business case with them and see how we scale, because margins can be quite tight if you deal within waste management or recycling. So we see that as a big task and try help enhance the business case with them. So that's certainly a challenge. But there are enhancers because they do good, important, and impactful work, and we're trying to see how we can help them monetize the impact that they're bringing about. I mean, of course, we need them to have a viable business case, but if they're very quantitative in their approach in terms of how much waste are they collecting, how much waste are they recycling, how much of CO2 emissions are they helping saving. There are ways that you can monetize that impact, right? You can tap into carbon credit schemes. I mean, Rwanda is a good example, having at some of the big projects have actually been monetized. I think I read in the New Times recently that actually quite a lot of carbon credits were sold from Rwanda, and we're interested to see how can that also benefit smaller ventures. There are emerging plastic credit schemes. There are emerging producer responsibility schemes where there would also be funding trickling down to some of the ventures that we work with. So it's about trying to enhance that business case, and then it's about trying to understand the legislative framework and understanding what is a public, what is a private job, really, especially when you talk about waste management. So obviously, in many parts of the world, it would be a municipal task to collect waste. In other parts of the world, and not least here, it's private companies taking care of that. So you just need a clear divide of tasks, and you need the right legislative framework around it, so you have visibility as a company, so that things don't change from one day to the other. If you're investing heavily into waste collection, well, you don't want that to turn into a municipal task the next day. So I think and that's also one of the reasons why it was so obvious for us to locate here in Rwanda, is that, I mean, even this week we've witnessed the World Circular Economy Forum for the first time on the African continent, and of course coming to Kigali, and we saw the launch of a very ambitious circular economy action plan, which is very unique, anywhere in the world that you launch such a plan, and now it's about seeing it come to action, and I think that will help a great deal in creating the visibility and the frameworks needed for companies like ours to operate under.
Thank you very much, Yannick. We'll come back to you. Evelyn, welcome. So I know a little bit about what you do. You run a fund that's exclusively focused on women. Tell us a little bit about how you got started. Describe the profile of women that have partnered with you to make this happen.
Yes, so as I mentioned, our specificity is really the fact that it's a local initiative. So we launched a fund with the idea of providing capital for women entrepreneurs. So we were women with a little bit of savings, and we said, okay, what can we do concretely to address the issues that we're talking about every day? Women enterprises in our region in West Africa are very, very small. In a country like Senegal, we have 30%, 31% of entrepreneurs who are female, but when you look closer, these are very, very small businesses, informal businesses. They generally generate less than 200,000 USD revenue per year, yet they are on value chains that have a strong potential, a big potential for Africa. And of course, like the agricultural value chain is one of these sectors. So we said we figured out a way to pull our savings together. We started with an investment club and investing our money in the stock exchange, in the regional stock exchange. And from 2016, when we started, to 2019, when we launched the fund, we went from 4 founders to 80 women. And in the meantime, Wick d'Ivoire was set up as well. And when I started full-time on Wick Capital, we were we kind of strategized several times during the last years. But when I started, the goal was to have a small fund, 8 million fund just for Senegal. And then we realized that accessing capital in international markets was actually tricky. When you are raising a fund, it's easier to raise a 20 million fund than a 10 million fund. And even 20 million is a challenge because people are more used to funding 50 million, 100 million funds. But for us, it was about getting smaller tickets, not 1 million tickets or 2 million tickets that no business would be able to absorb at that stage. So it makes more sense to raise a 20 million fund for 2 countries, doing tickets that would go up to 500,000, and help these small businesses formalize, grow, so that then they could become large, sustainable businesses. So what we did, so we knew what kind of tickets we wanted to do. We knew we wanted to do equity because equity allows you to be patient and also to be present in the business, to provide technical assistance as a shareholder. But yet we knew that also equity, providing equity exit would be a challenge in our markets because VC and private equity are extremely new activities. When I came back to Senegal 8 years ago, I joined the first fund in the country, which was the sovereign fund. There was another fund, Afrique Funds, but it was a large PE fund investing mostly outside of Senegal. So it was really the first vehicle that was investing equity. So we were also innovative in the way we structure our deals. I will probably come back to that. It's a little bit technical. We're taking everything between private equity, private debt, just to make sure that we have self-liquidating investment. We have our target IRRs, our target return, and at the same time, it's a win-win with the entrepreneurs. The other thing we did that made sense for the market where we were operating was setting up our own technical assistance facility. So within WIC, so the investment club still exists as an association, a non-profit, and within that non-profit, we set up a program that's called the WIC Academy, and it provides pre-investment support and post-investment support, and it's complementary to the investment activity. Because I think as a local investor, as an African investor, what you know is that the private sector is not mature. That's a constant in everywhere we go in Africa. So we have to build our private sector, and we have to be intentional in the kind of investments we do, in the way we structure it, and also in the technical assistance we provide. We cannot just provide capital without the support. So we both have to come hand in hand. And of course, we work with accelerators and incubators and also government agencies that are active in Senegal and Côte d'Ivoire. So far, we have invested in 7 businesses in a wide variety of sectors. But then I can stop here for now.
Sorry, just to add a very quick experience we had recently. So with the Techstars program we launched in Lagos, when we opened the call for applications and the calls for applications closed, it was 90% male founders and 10% female founders. But when we went through the selection process, which we didn't deliberately try to find female founders, but when we got to the final selection, it was a 50-50% representation of male and female founders. And what we find is that when you pitch the female founders against the male founders, and no offense to the male founders here, you find that the female founders actually outperform them. And we spoke to each of the female founders and said, why haven't you applied for such a program before? And they said, I didn't think I was ready. I didn't think I could compete with my male counterparts. So the cultural biases in Africa tend to suppress and prevent female founders from even coming forward. But when you do come forward, you find that the results are really, really remarkable. I just thought to add that.
If I just may touch on that. And this is exactly why intentional is important. When you're talking to female entrepreneurs, they tend to come to us because we are women. It's a female-led fund. So there is this trust relationship from the get-go. And this is the feedback we are getting from them. If you had done just female call for application, we would have gotten so many entrepreneurs. They are there. We have a large pipeline in both countries, but they tend to underestimate themselves. Even now, we're talking to entrepreneurs. We think as a fund that they are ready for investment, but they want to go through the WIC Academy first because they think that they are not ready, right? So it's a problematic, and that's why it's very important to have some programs that are dedicated to them. Yeah.
Thank you. So when the women came, they came ready, basically. Yeah, okay. So Aline, we would love to hear your thoughts on female entrepreneurship. And then your thoughts on how to create an entrepreneurial ecosystem or an ecosystem or economy that is conducive to entrepreneurship. So 2 questions.
I was actually smiling listening to Evelyn because this is one of the things that is keeping us up at night, in a sense that as we select individuals, 35% are women. And I completely agree that as they go through the selections process, then you see then a higher number of women actually getting into the program, but still we are at 45%. And so I think, and part of it was our realizing that, as you're putting all these criteria, eligibility criteria, women tend to question themselves a lot and wanting to tick all boxes. If there are 10, like a list of 5, whatever the bullet points, they would wait to tick all boxes. And so I really appreciate what you mentioned in terms of just women at the forefront and therefore inviting other women into such program. I think to answer your second question, part of it is exactly why we're here. So creating an ecosystem means providing a platform for different players. So the funders, the incubators, the entrepreneurs, and providing a platform of collaboration, of learning and synergies. There's a session that we implemented during the Global Entrepreneurship Week 2 weeks ago, where we had actually Philip and others speaking to entrepreneurs. And the gap in understanding of expectations is huge. And so on one hand, Philip sits wondering, but where's the talent, where are the companies? And then on the other hand, you have entrepreneurs saying, well, we don't know who are the funders, and so there is a gap. So part of it is really bridging that gap, and I believe this is exactly where we are, where you have academia, right, and you have the different players, you have government and policies as well, to be able to make sure that there's a conducive environment from regulation and all it's the whole chain. So for me, that's my take on this.
Thank you, Aline. So to switch it up a bit, Philip, how, as an investor, investing on the continent, how do you think about returns? And what kinds of returns are you expecting? Where will they come from? Are these, is it an IPO? Is it an acquisition? Is it dividends? What is the quantum? What is the time frame? How do you think about returns?
It's a question many investors are asking themselves. I think if you're looking at IPO, that's a no-go because our markets are too illiquid. Unfortunately, we see a trend of a lot of startups saying, I'm looking for capital when I get to Series B or so let me go and domicile in Delaware. And so what you get is ownership has moved to the West. Operations are here. And so I like what Ina said, where you need to get more local, right? And so we push, how do you get more local funding? From an IR at Catapult, we certainly believe in profit because of impact. And so in one of the lenses that we do look are, if we invested in this company, what's the kind of impact it could have job creation-wise in the agriculture space and different metrics. But when it comes to return, yes, we're looking for high return, but we're also looking for an impact in terms of what they're, because there's a ripple-on effect. And who are the people that do care about that the most? It is the local institutions, the local corporates. And so we try and get them in to see that this is their, they can come in at this point. We've, unfortunately, in the last couple of years, had a lot of what we call zombie funds out of, where what that means is they've come to the end of life. So a fund will go up to 10 years, and they need to return their money. The companies they invested in are very good, but the investor is saying, all right, time's up, I need my money. And so they're in a limbo, and there are a number of these. I think there's opportunity for local capital to come in, to create more vehicles to now do the acquisitions. I think our acquisitions in the next 5 to 10 years will still come from trade sales, from acquisitions in the market. IPO is a very, especially here on the continent, we haven't seen much. The largest in the region is Nairobi Stock Exchange. We haven't seen any IPO in the last 8 years. So it's not something I see over the next 5 years. So I think it's more trade sales as well as acquisitions to other vehicles. Yeah.
Thank you. And maybe you can be a little bit more descriptive. So in terms of multiples, for instance, you invest in a company today, bare minimum, what are you expecting?
We're talking about a 5x, right? We do very early stage. So our ticket sizes are 150 to about 250,000 US dollars. We are looking at a portfolio IR of between about 18 to 25%, knowing that a lot of companies within the portfolio will not get there. So you're looking at those that have potential. And we've seen it in our own portfolio. One company out in Ghana that we invested in, and they're going through right now doing a Series A of about 10 million. We've already done a 3x on that one. And we typically tend to get out at Series B because our focus is very early stage. We want to get out to put back into that one. So we're targeting, that's what we're targeting. And our focus, I like that, again, Ina said it, is agriculture tends to attract the least, and yet it's the one that pulls up the economy the most. So our focus is on the agriculture space as well.
Thank you very much. Janek, over to you. So you're in a very interesting space, including waste management, right? Tell us a little bit about your favorite portfolio company. It doesn't have to be in Rwanda. It could be anywhere, but something that would raise eyebrows. No?
Sure. I mean, we're quite excited about the potential for true innovation within this space emerging here. Can be in Rwanda, can be in Kenya, Uganda, South Africa, Ethiopia, Ivory Coast, where we have portfolio companies already. And we're really, really excited about the potential for them and their solutions becoming relevant beyond national borders, regional borders, continental, maybe even becoming globally relevant, right? I mean, up in the north, it's a good example, but it's an old, tired example. I mean, I think we need to move beyond talking about how mobile money emerged in Kenya. It's a good example, but it's an old example, right? We need other examples from here. There are many other examples to promote. We believe there will also be many examples within circular economy, for sure, waste management, recycling, and so on. But I think what we're really excited about are the companies that are trying to close the loop locally, regionally, yeah? So we're invested, I mentioned packaging earlier. So we're invested in one company in Kenya, for instance, that's really pushing it. And one thing is to go recycle PET bottle to new PET bottle. Another thing is to go from food grade packaging, recycle that to new food grade packaging. Now that's quite astonishing. Or trying to close the loop, another company within food systems where organic waste, food waste, is turned into organic fertilizer, turned into animal feed, and that again is turned into food, and so on and so forth. So I think we're very excited about these companies that can prove a closed loop locally or regionally, I'd say. Yeah, the two companies I'm talking about is Mr. Green, Africa, and in Kenya, and a rebrand of a company used to be called Sanergy, is now called Regen Organics in Kenya. Yeah.
Thank you. And what do you see in the future for these companies?
Yeah, I mean, many of them are already looking at expanding to other markets on the continent. So certainly we hope that that will be the case. But we need to bring more companies to that stage. I mean, so our spectrum, investment ticket size-wise, I mean, if I look at the portfolio, is anything from $20,000 to $2 million tickets in rounds of $100,000 to $10-20 million, right? So we need these companies like a Mr. Green I mentioned, or like a Regen Organics that are getting there and have really grown in capacity. But to get there, we obviously need to start early, right? We need to to back student ventures even, right? We need to prove that, you know, I mean, I'm not at all discarding the fintech space, very impactful and inclusive and everything. It's not that, but we need to demonstrate that you can also, as an entrepreneur, venture into a waste journey or a circular economy journey, and to build these companies that really gain traction and improve capacity, we need to start early, right? So we, I don't know, bear me if I get myself in trouble here, but we've and one thing doesn't exclude the other. I mean, so we've to really start early. We've recently done a partnership with another university out in this area, and non-mentioned, non-forgotten, and done a student seed fund with them. So we need to, and I think as funders, and especially within our space, we need to try and build a cohesive funding chain. So we need to understand where does one start and where does one stop, where does the next funder take over. So I think that's what we're really excited about trying to plug into now. You know, a national green fund for Nerwa here has its facilities. There will be the commercial banks at some point, and in between there will be Philip and ourselves, and so. But that's just important, right? Because we've seen it so many times that the entrepreneurs, they spend 50+% of their time trying to fundraise, right? And we can't have that. They're too busy building their businesses. So, sorry, that was a little bit here and there and everywhere.
No, that was perfect. Thank you. That sounds like the dots are connecting. So that's amazing. So here's a kind of a more cerebral one. This one is directed at Evelyn first, and then Ina. So Evelyn, your fund is not a traditional venture capital fund. So for the sake of the audience, maybe you can go into more detail and explain what makes your fund different.
We actually just published a small report on innovative funding structures in Africa with other peers from Nigeria, South Africa. We designed our fund to bring a solution to a problematic on the market, to close a gap, a funding gap. So we, for example, there are several ways where we are atypical. We chose to set up an open-ended vehicle because we wanted to avoid the zombie funds. And this is something that the financial markets do not like. Traditional funders in Africa, which are DFIs, Development Financial Institutions, they kind of shy away from those structures because they're not used to it. But it makes sense because sometimes, indeed, you are investing in a company that is doing well, but you are not yet able to realize your returns. But you will be probably after 12 years. We do not intend on remaining 12 years into businesses, but it's good to have the flexibility. For the other businesses, we will exit normally after 6 years and then recycle the funding, but yeah, it's still tricky. The other way we are totally atypical, it was the size, I said it, the currency, we want to invest in local currency where we are. So it's all responding to the market, but it's tricky when you are fundraising, and that's also where we are also entrepreneurs, and we are kind of making a grand écart between the source of money that we want to attract in Africa and the use of funds, the entrepreneurs. What can I say more? Yeah, maybe I can just touch on something that has been said. I love the idea of a value chain in an ecosystem. It's important to have the venture builders, venture studios, government agencies that are and also academia like universities that are helping entrepreneurs start something. And then after that, you have another actor that's taking over, and then etc. That's how we are going to build our private sector. And then that's also, it's important to have this vision as an actor of this value chain to be able to collaborate with the others. And I do not think that we are competing for the same pool of money. Actually, we're not. Even if there are other gender funds in West Africa, we are not competing for the same amount of money because the needs are so enormous. So we are all complementary, and we all have to collaborate, share best practices, share opportunities, share pipeline as well. I will present you to one of our portfolio companies. She has a great product from used tires, and I'm sure you will love her because we invested in her very early. They just came out of business school. It was just a company that was starting out, and now they have enormous traction. They are producing something as a substitution to imports. They are producing granulate from waste tires and also some larger granules that are used by cement plants as a substitution to fuel, just in order to reduce gas emissions. So they are now going to fundraise, so we are definitely going to present them to you so that they become your favorites. So yeah, for me, there is so many room for collaboration throughout the continent, and that's also the reason why I'm here. We started with an atypical fund based in Senegal, just on 2 countries, but our vision is, of course, African. Our initiative is being replicated in so many countries. Benin, we have some requests from DRC, even Rwanda. Some women from Rwanda have been in contact with us just to set up the same thing. And yeah, I think at some point we will have this larger fund, more traditional, close than 50 million, 100 million, that will be spread across the continent, including Rwanda.
Thank you. That's an amazing growth story as well. Looking forward to more updates in the future. Yeah. So, Ina, we've had a lot of conversations around the challenges, the types of ventures that tend to get the most attention. It makes me think that perhaps venture capital is not the end-all be-all, right? So what type of financing does Africa need? Is it venture capital? Is it private equity? What are your thoughts?
I think Africa needs any type of funding it can get. But I think what the tech ecosystem needs is a lot more debt financing than equity investments, because what you find is that when a VC or a private equity firm takes some equity from your company, they tend to kind of influence the direction that your company goes into, and sometimes it changes what the founders had planned to do in the past. With debt financing, there is an obligation to the funding entity, but as long as you keep your business on track and you're able to pay back the debt, then you'll be fine. But I do think, and Philip also touched on what I said, I do think we need to have a lot of Africa-based funds, because what that would help us do, and so if you have a fund that is based out of Silicon Valley or Europe, for example, their major focus is the ROI that they get from the equity they got in return. And usually there's little or no focus on what impact the startup is making to uplift Africa from where it is right now. So I think from a source of funding perspective, we do need a lot of Africa-based private equity firms and VCs. I think more importantly, it's very difficult for you to find a pension fund administrator in Africa deciding on equity investments as an asset class that they're willing to put their funds into. If you go to the US and in Europe, however, the pensions funds there are happy to invest in equity. It's not that the money isn't here. It's just that the people with the money choose lower risk and safer asset classes and investment options. And so they tend not to put their money, give their money to VCs who are looking to invest it in tech startups. So I think what the funds in Africa need to learn is be a lot more risk, so it's not for them to take more risk, but to look more in the area of equity investments when you're spreading your portfolio of asset classes that you invest in. But we certainly need a lot more Africa-based VCs and private equity firms, and we do need the entities that have the funds to become the source to also think about investing in African startups, because then you start to see as KPIs being set not just the ROI on equity, but also impact, the impact side of things, which I think is what many African countries need to lift them out of the economic situations that they're in.
Thank you. Yes, and I was just about to come to you, Philip. So hold your comment. My follow-up question was, what do you think the inflection point is going to be where you end up having a steady flow of local finance into the hands of investment managers like yourself?
Answering that question, I'll come to what Ina mentioned in terms of why we are not seeing that. One, because governments are the biggest competitors with startups. And I'll tell you why. The treasury bonds here in Rwanda averaged between 12 to 13%. Last week, the Uganda government issued a bond at a 20-year bond at 18.5%. Kenya issues at 12%. Not many businesses in Africa, after profits, can give that. So I tend to fight with people in government saying, look, you're the biggest, you want the entrepreneurs, but you're the biggest competitor. And I'm fortunate I sit on a board of one of the banks. To all startups here, stay away from bank debt. They will come from for your mother, your father, your title, and everything within it. If you can find, and I'll use the word that Ina said, yes, there are angels or so venture capitals. I like to call them shark angels. Stay away from them too. We've come across so many companies that have seemingly good angels, but you go to look at the cap table and they are non-present angels and they've taken everything. What good VCs tend to look for is we need to have more equity in the hands of the entrepreneur. Going into your Series A or so, we ideally want to see them with 50%. And the reason is they're going to be making all the decisions. They can't be going to the shareholders, right? So that's what I would caution. But to your question of how do you see that directing, I think governments are going to need to think hard about how that flows through. I think there's opportunity for local corporates, local high net worth as well, that counter. And the reason is it's a good point where, and which we saw through our pilot fund, where there was both DFI money plus also local institutional. That sort of relationship, I think, would attract more to come in. But I think that's figuring out how we get government to not be a competitor to where this money is going to the economy. Yeah.
Tall ask, because they have other priorities, right? I know. Yeah. So Evelyn, you're raising a fund, right? And you're trying to do that locally. Describe your LPs, the people with the money. What do they do? Where do they make the money?
We were the first people with a little bit of money. Actually, collectively, we put 10% of the fund on the table before going out and raising funding. And I already mentioned the challenges with traditional commercial funders, but we were really attractive to philanthropic money. Donors like USAID, like some government programs that came and reinforced our first loss. So we set up really a blended structure with a sufficient first loss capital. We were able to attract capital from a local insurance company, which is totally new because, as you said, it's a new asset class for them. And to be honest, we will probably shift to Mauritius at some point to raise the rest of the amount we need because Senegal is not there yet in terms of financial place, even if the ecosystem is very strong. But yeah, the money is going to come back anyway. If you allow, I will interject to Ina in the discussion about equity and debt. Don't forget that in Africa, we have early stage businesses actually. They are not eligible to debt anyway, because the main source of debt is banks. Most of the businesses that we look at are too young, too early stage to attract debt. And even if they would attract debt, they would, like those debt funders, whether it's private debt or banks, they would want for a strong level of equity. So what we need is lots of equity funding from angel investors, from VC funds, from SME funds, from private equity, and then we leverage that funding to attract lots of debt. Because yeah, of course, you have to leverage your business to increase your profitability. So that's the point I wanted to make in the discussion between equity and debt. We are an early stage continent. We are just starting our growth. We are just starting to develop the private sector. Let's invest. Also, as individuals, when you are an angel investor, the amounts you're investing are like $5,000, $3,000, sometimes $2,000. And collectively, it makes a difference for a business that's starting out. And that's also how you attract other types of funding into your ecosystem. And that's how we made it. We are making it a little bit in Senegal. We have WIC Senegal. We have the Dakar Network Angels that's also doing lots of angel investing.
Thank you, Evelyn. So, yes, go ahead, Ina.
Just to qualify, the kind of debt financing that startups should be looking for is convertible notes. So that at the end of the tenure of the debt, if you're unable to pay back, then it can convert to equity. But be very careful to ensure that you put a cap on how much equity that the financing entity can get in return. So when you're taking that financing, you have no obligation to give up equity. But at the end of the tenure, if for some reason you haven't gotten to the stage where you're generating enough cash to be able to pay back that loan, then that debt can convert into equity. Yeah.
Thank you for that tip. So if we don't have any more comments, I would love to open up the floor for questions. Yes, go ahead, Philip.
You asked about how to pull more into this space, and just to point what Evelyn mentioned, what I've seen as well, other institutional, not in here in Rwanda, but other places that they've done, is do what they call convertible grants. So I'll give you a grant, but if it works out, I'll convert it at that point. The other one as well is a challenge in getting a lot of our pension funds and corporates to put in money is how do you do a blended finance? And what I mean is who's coming in to take first loss? One of the pension schemes I know, what they asked is they need to be able to pull out within a period of 3 years. And who can step in to provide first loss for 3 years into this fund, who will buy them out, and then allow them, if they cross the 3 years, they'll go on. But within 3 years, they need to be able to have that right to do that. So there are lots of ways to structure this to allow more capital to come into the space. But again, it is again focused on how do you get, what Evelyn mentioned, is we are a continent of first time, right? We haven't been doing, we've been doing this for the last, I'll tell you this, in Africa alone, the wealth has only been created in the last 15 years. In other continents, they've been doing this for 200 years, even more. And so wealth has been passing on. We're doing it for the first time. And so finding structure that work for us is absolute paramount that we need to do to structure this one here. So thank you.
Thank you. So creativity, first principles, unique problems, unique solutions. Yeah? Excellent. So everyone on stage has experience putting money into companies, identifying talent. I think is a really good opportunity. If anyone in the audience would like to engage, if anyone has a specific question, I think I saw a hand here go up first. So maybe you can just introduce yourself. Is there a mic that we can, okay, there we go.
Hello, everyone. My name is Tsekhofadzwa.
Sorry, so maybe you can stand up so that everyone can see you and then speak a bit louder. Thank you.
Okay, thank you. My name is Tsekhofadzwa Makhaladi from South Africa, from Wits. Just want to get a sense about the feedback loops that we're creating inside this ecosystem. How do we connect the dots? In that we know that the biggest problem in the entrepreneurship ecosystem is funding, access to market. Now we're talking startups that would have emerged from certain levels of development. Now that they got to this level of startup, the challenge is funding. And here you are, I had at least that's twice the mentioning of the word talent. That's what we're chasing, talent. What is the level of your involvement at the most preliminary stage of the formation of this particular startup to co-create the talent that you seek, on which basis you're going to be determining the funding for the same? So I just want to get your level of involvement as part of the feedback loop to at least just a preliminary level of the development of this study, so that because where I stand now as a person who trains and is engaged in the development of entrepreneurs, I'm more convinced that I'm doing quite a perfect job, yeah? Developing them. And when it gets to a level of startup, they struggle with funding, and what I produce is not so much of a talent to you. So what is the level of your involvement in the co-creation of the talent that you seek? That is my question to you as part of us closing this particular distance in the ecosystem. Yeah.
Thank you.
You can
Aline? Okay.
I think for us, a couple of ways we are looking at it. There's an initiative that we're implementing in secondary school. You might be familiar with it. It's on the South African side, it's the Alan Gray Challenge. On this side, it's the Wavumbuzi Entrepreneurship Challenge. Because then we thought, well, if we are to nurture this talent, it has to start earlier. And so this intervention is at secondary school. And so every year we select different industries. This year we had smart cities, renewable energy, e-commerce, and then we pose challenges. And the beauty of it is young people start to see gaps, opportunities that can be turned into future businesses. So that's the second element is academia. And I think there's a reason why once again, we're here today, because there's a lot of conversations that are happening as to what type of content, what curriculum, what environment do we create to actually nurture entrepreneurial aspirations, competencies, and therefore the ability for graduates to launch businesses and ventures. And I think within the talent investor, which now I'm starting at very early stage, and now within the talent investor, what we're doing, we actually are selecting individual, pre-idea, pre-revenue. And it's that journey of launching a business from scratch. And therefore, building a pipeline for these, these investors here. And so that really is one of the many ways we should do more of this, right? So there's a lot of, I think the reason why we focused on that talent investor is because we saw a lot of focus on supporting existing startups, but then a gap in that transition. So to your question, I think those are some of the things that we're doing on our end.
Thank you, Aline. Let's give it to gentlemen. Okay.
There we go. No, I mean, concur fully to what you say, Aline. I think we see so much potential for partnership with universities. To my point, also about starting real early. I promoted another university earlier, so I should also promote the university we're at now. We're quite excited about very, very tangibly here the Industry Innovation Lab. Have that at CMU. And well, we know Leandre Berra and team of SLS Energy very well, hatched here at the Industry Innovation Lab. And I think many more entrepreneurs that we could get to know early. And yeah, I do see us having a role of providing that early stage capital. Yeah, so just want to make sure I also mention this good partnership potential. Yeah.
Thank you, Janek. Yes, Philip.
Maybe it's something I get to see when I speak to a number of startups. What you're doing, building products, is amazing. But there is a big difference between a product and a business. Those are two different things. And many times, a lot of startups and engineers think, if we've got a great product, which is amazing, it will solve a problem. But you need well, that's what we look at, is what's the team like? Because the business side of things, from your finance to the marketing to sales, you'll be surprised how many startups say, I have this product. And you say, who have you talked to? No, I just have this product. They've not gone out. So that's a big differentiator there. So the kind of talent that you're looking at is, and I'll give you an example. We've seen a lot of decks where they say, look, I'm in Kenya, and we're looking to expand into Tanzania and into Uganda. And for those who come from Kenya, this is, you ask the person, they're based in Nairobi, say, well, have you been to Uganda? No. They've not taken a bus to go to Busia. Busia is at the border town between Uganda and Kenya. If you've not taken a bus to go to Busia, how are you going to go to Uganda? Those are kind of things. So the kind of talent is, well, but the kind of decks that we like is if someone says, oh, on our team, there is someone who worked with Unilever and they run operations for Sub-Saharan Africa. Well, great. Then there's someone who can actually think around the growth. So beyond the tech side of things, because I come from a tech background, right? And we are very notorious for inbox, and this is what I do, right? Who are the people that you have on your team that can think the marketing, that can think sales, that can think understanding, talking to people? That's what we look at. What does the team look like? I'll pause there. So in terms of the talent that you're looking for, it's not just the technical, but it's also the business talent.
Thank you, Philip. Evelyn, it's the hot topic.
Go ahead, after you.
Yeah. So for us, it's part of our value creation process because as we said, investment readiness, we factored it in. We knew we wouldn't get any businesses that were investment ready, so we set up Zurich Academy. And then we know that talent is an issue, of course. So in our value creation post-investment, we have set up a whole parcours with experts to support the entrepreneur. So a few examples. The WIC members, these 99 women who funded the fund initially, they are mentors. They sit on the boards of the businesses we invest in. So they are these big sisters who are very savvy, very business savvy, that are supporting the entrepreneurs. One example. Second example, when we invest, when you do your DD, you see all the gaps that exist in the business. But for us, it's not a reason to say no. We are not investing if the potential is there and if the entrepreneur has the potential. We will invest, and we will also invest through the WIC Academy in closing those gaps. So you need an accounting firm. We have one, a very good one that we have selected, who is working with all the portfolio companies. You need to set up your quality, hygiene, security, everything, because you are an agribusiness. So we will provide that service for free during like 3 months. And then, on all the gaps that we have found, this is something that's funded by the Academy. That's the post-investment support. And then something that's so important for women entrepreneurs, we have coaching, a professional coach, just to walk you through this phase of going from being a solo entrepreneur sometimes with just 100,000 revenue per year to an entrepreneur with a team of 50 people and like 1 million, 2 million revenue, just to go through this phase of transition to set you up as a CEO, right? So it has to be part of the strategy as an investor if you really want to push those businesses.
Thank you, Evelyn. Ina?
All right. I think this is such an important question, and I couldn't be more happy that Wemi and the CMU Africa team has given us the opportunity to speak here, and that's the role that academia has to play to solve this problem. When Dr. Sunday brought it up earlier on, I think a lot of people don't realize how profound the scarcity of talent problem is. And just to give you the very several implications, and one of those implications is it's really going to impact the ability of startups to make it through the growth phase. Many startups are going to die in the valley of death, what we call the valley of death, which is that point where you cross, where you then get into the growth stage because you cannot attract and retain the right talent to help your business to scale. And there are short-term solutions, but it requires a longer-term solution, and a solution at a much bigger scale. And it's not just the startups that are suffering it. The incumbent companies are suffering it as well. So the problem is a supply and demand problem. So what's happened is that because of the proliferation of startups in Africa, the demand for talent has increased. But what has exacerbated the problem is that big techs and international companies have now found that there are quality talents in Africa that are cheaper. So they've come and they've offered FX as compensation. So you simply can't compete. And my view is the only way to solve that problem is to solve the supply problem, which is exactly what India did. And it's not one person that can do it. We as an industry have to come together and we have to partner with the governments to work with academia to train more people who are willing to transition into a tech role, to train them so that we have more supply coming through, because there is nothing you can do. You can't compete with Google or Facebook when it comes to compensation. Your talent will leave you. What's more important is that you have a pipeline of supply of talent that you can quickly replace them. Remember that as a startup in the very early stage, what the investor is betting on is the team, because you don't really have a product that is scaling. So when the investor is asking you and is trying to decide whether to say yes or no, what they're doing is assessing your team. And you would increasingly find it very difficult to get funding from any investor if you're unable to demonstrate that your team is competent enough to take that prototype or take that idea into a product that you can launch.
Thank you. Well said. Yeah. So there was a second hand up over there initially, and then after this gentleman, I'll find a lady. Yes, I think she had raised her hand up third. So the gentleman over here, and then the lady in yellow over here. Yeah.
Thank you. Good afternoon, everyone. I'm Obasinachi Ilonu, a co-founder of Anisha Tech. based off Lagos, Nigeria. So I would want to direct this to Ina, if I got that right. All right. So I'm a co-founder of Fortify, an insurtech here, and we're currently at a pre-seed round. And in the course of speaking to investors, we have come to realize that as many VCs that say they are early stage could mean something else for them. For a lot of them, early stage does not entail pre-revenue. And so my question is this: how would you, or rather, how would actual early stage startups like Fortify, for example, access the much needed funds to even get into the market? And I say this because we're in the insurtech space and insurance is heavily regulated. You really need funds to acquire licenses that would actually allow you get into the market. So it poses more like a chicken and egg problem for us, because now investors want to see some level of traction, but then we need funding to get that level of traction that they want to see. So how would you reckon that startups in our kind of situation get around this? And then secondly, about the ARM Techstars program, I think I got to know about it beyond after the application had closed. So I would quickly want to ask, when can one expect the next cycle? Thank you.
The challenge you have is that the industry that you operate in, I'm careful not to say it's not yet ready for leveraging technology, but let me say this differently. The traditional players in that industry have to be ready to evolve their business models to leverage technology for them to, because partnerships, in my view, is an extremely critical component that is required for startups to be able to grow. And people talk about funding. Funding is a problem that startups have, but it doesn't matter how much money you get, it will never be enough. What you actually need is, beyond the funding, what else are you getting from the entity that is investing in you? And it includes partnerships, it includes connecting you to new markets that you otherwise would need to expend a lot of the capital that you've raised to spend in marketing to get. And it's about, especially in the insurance industry, bridging the gap between the regulators and the tech startup ecosystem. Because one of the things we found is one of the biggest threats to startups' survival in Nigeria is regulation, because there are a lot of unintended consequences. It's not that the regulator wakes up and decides to kill startups. It's just that because there is such a big distance between the regulators and the tech startup ecosystem, they tend to come up with regulations that they may not realize have negative impacts on the growth of startups. So we set out, because we're a non-bank financial institution, our focus for our venture building programs was fintech and property tech companies, because that's our core business. But when we ended up with the cohorts that we now have in the Techstars program, it turned out that there was one legal tech company, one insurtech company, and one health tech company. And that's because one of the things that we're looking at as ARM is, even though our primary focus is asset management, private equity, and real estate, we recognize that we may be operating in a brand new vertical tomorrow. So we don't shut our doors to startups that operate in industries that are outside the verticals that we operate in. But what I would say you should do, my advice to you, is sometimes these incumbent companies need somebody to push them to see what the opportunities are beyond doing their business the traditional way. I don't know if that makes sense. And it may require startups like yourself and any other startup that is operating and that is trying to push an insurtech value proposition to approach the incumbent companies, the cornerstones, and all of those companies to say, you can be a lot more efficient and you can deliver a lot more value to your customers if you change the way you do business to leverage digital technology. And here's what I have. Let's partner together. So apart from funding, I think you should also seek pushing, and it may require you to educate the traditional companies to see how much more they can get from partnering with tech startups like yourself. And you can even start with the partnership side. And hopefully that would get you to the stage where you become attractive to a VC, where you can leverage your partnerships with bigger companies to try and convince them that you're the right company to invest in. Does that make sense? Yes, but we'll talk after the session to see. And by the way, the current ARM Lagos Techstars Accelerator cohort is ending March 16th. Right afterwards, we would commence the call for application for cohort 2. So I'll take your details and be sure to let you know when we do.
Excellent. Thank you very much, Ina. So unfortunately, we are very short on time. So this is what I want to do. There are 2 young ladies that raised their hands. I would like to hear from both of them. We'll do a rapid fire round. Ask your question quickly, and then one selected panelist will answer your question quickly, and then we'll do closing remarks, and that'll be the end of the session. So to my right, the young lady in yellow, please stand up and give us your question very quickly. Thank you.
Thank you. My name is Nigena Hawa from RICA. It's a great pleasure to be with you. I'm a CEO and co-founder of Agrivators, and we are doing waste transformation. So I'm glad to see you, Janek, here. So I'm wondering, what are the challenging things that you are facing in Rwanda to reach where you want to go with the waste transformation thing, because it is a new business in Rwanda. So is it working? What is the main challenging things? And the other question goes to Anna. You said that you are doing mostly on tech side. So I want to know the feasibility of these things, because if we compare in Africa, when you go to do tech things, there's some certain things that raise up. Let's say the human capacity, that's the first thing. The second thing is the customers. And the other thing is we end up, let's say, buying raw materials from the outside markets, getting human capacity outside from the other markets. So how is it? Is it feasible? Let's say if I make like a drone for a farmer, is that feasible for a farmer to buy that drone, since it is expensive to them? So how is tech? Do you fund people and then make profit? How is it done? Thank you.
Thank you. So Janek, and then Ina, as quickly as you can. Thank you.
Okay, real quick. Thanks a lot for the question. So there's a good, decent collection capacity. Seems to work quite well here in Rwanda. We need to move beyond that, of course. So it pleases us to see what are in the plans. Obviously, we need good, efficient waste segregation so that we can start to reap value from the different waste streams. So we know that there are a lot of plans for that. So I definitely choose to see more opportunity than challenge.
Thank you, Janek. Ina?
Okay, so one of the things I haven't mentioned was that ARM's motivation for driving its venture building endeavors is actually not primarily the return on investment on equity. So as ARM, what we find is that because we're a heavily regulated entity, and because we're a very mature company, we realize that we can never be as nimble and as fast and as innovative as a tech startup. So the major driver behind our venture building endeavors is actually to help us drive external innovation. So we have, under our private equity companies, we have an agribusiness entity. And what we will essentially do with somebody who is building an agri-tech solution is to partner with them to see how we can leverage the technology that you've built to derive new value for existing customers that can come through. And that has benefits for the subsidiary business under the ARM holding company and the tech startup as well. So it's not just investing in the tech startup and say, here's the money, go and find how you need to grow. We go beyond that. So we have conversations with the startups in any of the cohorts, and we introduce them to the businesses and have them talk about areas of synergy and where they can partner and find integration opportunities that derives the business value for both entities.
Thank you, Ina. Now, Bemi, one more question from the audience. The young lady in red. One question very quickly, and then select one panelist to answer you very quickly, and then we'll wrap up. Yeah.
Hello, my name is Jimbi Jausek from Senegal. Sorry for my really bad English and my baby voice. I'm really sorry. My question go to Evelyn, of course. I am an electromechanical engineer student and CEO of Nopaltech. It is a startup which producing air purifier. So my question is, why traditional funding organization rather invest in small businesses than new technology-based startup, for example? Thank you.
That's a tough question, but a good one. I will give my personal opinion and not the opinion of WIC. I think there are more opportunities in traditional sectors, brick and mortar activities, where we'll see real innovation and where we have a value to bring to the world. I give an example. I personally really like agriculture and the whole value chain. And country in the Sahelian region, we are producing superfoods that everybody wants, that have high value, and that we have to transform. We have to invest in our food processing units in Senegal and in the neighboring countries, because the demand is high locally and it's high globally, for example. Whereas in tech businesses, and what I have been seeing in our ecosystem is that, okay, fintech is attracting capital and there is lots of potential for growth in fintech because it's a real need for the population and it's answering to a real important need. So you do not have to educate your target into using mobile money. And that was the success of Wave and the success of Orange Money in Senegal. But in the other tech solutions, I always find myself talking to entrepreneurs who are trying to convince their customers, future customers, how to use the app and that they should use an app. And as an investor, this is not something that's attractive to us because we want to invest in businesses that are going to sell. Sales is everything. We want impact, but we want returns. Both goes together. You won't have impact if you do not have returns, and returns alone without impact is not really sustainable in our ecosystem. So I hope it answers your question. This is why we tend to invest more in brick and mortar businesses, even if they are all heavily tech-enabled, because we are in 2022, so every business has to use tech in order to accelerate their growth.
Thank you. Wemi? So, okay, I'm so sorry. It's maybe another time, yeah? There's one more question. Should we take another question? You have to be really quickly or really fast, sorry. Yeah. Yeah. Let's give him the mic.
Yes, thank you so much, dear panelists, for such a thoughtful discussion. I'm Marisha Clever, the student from Davis College, a passionate heritage preservationist. I'd like to ask, the global challenges and the change agents are really aligned, and hence I'd like to ask on both for the investment and funding raising, you investors from the angels, capital, you're really focusing on those generating incomes. And hence my question goes to Aaron Kabanda. How do social enterprise, which you founding income sometimes in Dialect 3 would compare along the fundraising and attracting the investors throughout the this entrepreneurship ecosystem? Thank you so much.
Thank you. I think in some ways Evelyn responded to the question, because what solution are you providing? Are people ready to pay for it? At the end of the day, you need to generate returns, right? Your business has to grow, whether you're a social enterprise or it has to be. And I think the challenge with social enterprise is sometimes that sort of the drive for impact, which is great, which trumps actually the understanding of a business model that sustains them. So I think what is important with social enterprise is, at the end of the day, how are you sustaining, how are you growing your business? How are you making sure that you're not relying on grants and therefore, so how are you growing your business? And so that actually, Evelyn touched on it beautifully. Thank you.
Excellent, thank you. All right, so now we're going to wrap up. We will take closing remarks from all of the panelists, beginning from Janek.
Thanks. Real quick, I want to be sure to mention that we are here for the entrepreneurs, not the other way around. We're here to try and give you a good value proposition from our side that goes beyond quote unquote just the cash, as I mentioned in the beginning. So piloting this circular economy hub, where we hope to see many of you, so we can understand your specific needs, and we can attach the right resources and access to everything you need. I'll leave it at that. Thank you.
Thank you. Aline?
Just a word of gratitude once again. Excited to be here, and I think as Jasiri, we support entrepreneurs, and we're there with the entrepreneurs for the long run. And so, just an invitation for exceptional talent here. But above and beyond, I think as you have all the different panelists, what this means is there are opportunities for funding for the right businesses that has the right team, right? And really, at the same time, that can provide the impact that the VCs are looking for and the returns. So you got to do the job and actually getting your venture to where it's attractive for these folks here. Thank you.
Thank you.
All right, so in closing, I'd like to thank Bemi and the CMB Africa team as well for having us here. And just for the entrepreneurs in the audience, the journey as an entrepreneur is a very brutal journey. When you hear people talk about their success stories, they don't tell you what they went through to get to where they are. I wish I could tell you life would be easier for you next year, but I have to be honest, it's going to get a lot more difficult, not just because the sources of funding are drying up, but more because most African countries today are experiencing inflation, and the devaluation of the currency is increasing your costs because you do have FX obligations to your OEMs who supply you technology. So my advice to you is not just to brace yourselves, but really to start thinking about things like finding companies who are aligned with your strategy and looking at converging. Because what I suspect would happen next year and in the years to come is that investors will start looking more to startups who have the potential to scale across Africa. And if you find a business in Ghana, in Kenya, or in Nigeria, for example, that has a very similar value proposition with yours that solves a very similar problem, I think you should start thinking about having conversations about consolidation, because that's going to become necessary for you to be able to look more attractive to a source of funding that is becoming even more scarce. But keep your heads up, and hopefully you would cross the valley of death.
Excellent, thank you, Ina. Evelyn?
And keep in mind that funding is not the objective of your business. It's just a mean to an end. And try, when you're growing and being in different programs, just try to develop your business acumen. I hope this panel was not too abstract, because from experience, I know that sometimes when we are between investors, we tend to use jargon, and that's not necessarily obvious for entrepreneurs and simple for entrepreneurs. We spoke about different kind of capital. Don't hesitate to come back to us and ask what is a convertible note, what's a safe, etc., etc. Probably you already know, but I know that some entrepreneurs just do not necessarily know that. And this is the kind of things you have to be documented about. There are so many capital available, so much capital available on the continent from different flavors. Some are early, even in the early stage, we have different colors, different types of funding. I think it's important for you to have that investor friend, even if they are not investing in your region or in your country, just to share about that and discuss about, okay, what is more appropriate for me at this stage? Do I go on a safe? What are the conditions of the safe, etc.? Because I know it's not easy to have the legal counsel at this stage, right? And then what I'm keeping from this discussion is the value chain, with the two keywords, a chain and the value, because each of us, actors in the value chain, have to take value from others. Because at the end of the day, if we want to be sustainable, we want to think about money. And we should not shy away from wanting to gain money from what you're doing as investors, as entrepreneurs. And thank you so much to CMU for having us here. It has been a great day for me. Thanks.
Thank you, Evelyn. Philip?
I think we live in some of the most exciting times. And the entrepreneurs in this room, you are so lucky. I keep telling my kids, when I was in university, we actually had to go to a library and I was given the card XY7Z and you walk in. Today you live in a world where you swipe and you have it there. You are so lucky. So that said, as Ina pointed out, it's time to get creative. For you guys here, you're much smarter than when we were in university. There's opportunity to get creative in terms of your, how, I don't want to say get funding, how you fund yourself. What Evelyn said, please look for places where you learn to grow your revenue, not get investor ready. Because I like to say some startups, a pig with lipstick is still a pig. No matter how good the deck looks, it's still a pig. Learn to grow your revenue. Focus on your customer. These are exciting times. And by the way, your customer could be in Costa Rica, in Paraguay, in Tanzania, in South Africa. You live in times when you do not have to have your customer in your village. So I'm excited about what Africa has in store and about what you guys are going to be doing in the future. Thank you.
Thank you, Philip. Thank you so much to the audience for your participation and your attention. I know the panelists are quite grateful for that. And to the esteemed panelists, thank you very much. I think it's been a really good conversation. And I hope all of you, including the panelists, have been enriched. Thank you very much.